Are the prairies and Atlantic provinces the new frontrunners in Canada's real estate growth story? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In a surprising turn of events in 2025, Canada's real estate landscape saw a significant shift, with the prairies and Atlantic provinces emerging as unexpected leaders. Traditional markets like Ontario and British Columbia have cooled down, while regions such as Saskatchewan, Newfoundland, and Labrador, and Manitoba have experienced remarkable growth. According to a new report from RE/MAX, these areas are now leading the charge in the country's real estate resurgence. Saskatchewan, in particular, recorded its busiest June on record, with home sales climbing 6% year-over-year to 1,768 units, nearly 15% above the long-term average. The residential benchmark price reached a record high of $370,700, marking an 8% increase from the previous year. Chris Garrett, CEO of the Saskatchewan Realtors Association, noted that the province is seeing record price growth for a second consecutive month, with some markets experiencing as much as a 16% year-over-year increase. The growth is attributed to affordability and an expanding job market, attracting new residents despite active housing units being 40% below the 10-year average. Newfoundland and Labrador also posted impressive gains, with composite benchmark prices surging nearly 11% year-over-year to $325,000 in June. The growth extended across all property types, with single-family homes increasing by 10.7%, townhomes rising by 3.2%, and apartments jumping by 11.3%. Home sales in this Atlantic province soared more than 13%, reaching nearly 2,500 units in the first 6 months of 2025, a 13% increase from the same period last year. Manitoba rounded out the top performers, driven by population growth in cities like Winnipeg and Brandon. Home sales exceeded the 10-year average by more than 5% in May, with the average home price increasing by 10.5% to $410,233. Catherine Schellenberg, president of the Manitoba Real Estate Association, highlighted that despite ongoing economic uncertainties, the housing market is strong, with the province's year-to-date average home price exceeding $395,000, an 8% increase compared to the first 5 months of 2024. According to Valérie Paquin, chair of the Canadian Real Estate Association, most housing markets turned a corner in June, although market conditions still vary considerably across Canada. This regional shift reflects broader market changes, including falling home prices in Toronto and Vancouver, lower borrowing costs compared to 2024, and increased supply, providing more affordable options for prospective homebuyers. Now, let's dive into a topic that's got everyone talking in the real estate world: the CMHC Improvement Mortgage Loan Insurance. It's a game changer for those looking to finance home improvements or new construction. This product offers insured financing up to 95% of the as-improved value for 1 or 2 unit owner-occupied properties, and up to 90% for 3 or 4 unit properties. This means lower down payments, making it easier for homeowners to finance their residential property purchases or improvements. The CMHC Improvement Mortgage Loan Insurance provides flexible financing options for both small and large-scale improvements and new construction. Whether you're buying an existing home that needs some work or building a new one from scratch, this product has you covered. Insured financing can go up to 95% of the as-improved value for smaller units and 90% for larger properties. This flexibility is a great boon for homeowners and investors alike, looking to enhance the value of their properties. One of the standout features of this insurance product is its flexible advancing options. For improvements that cost less than or equal to 10% of the as-improved value, single advances are used. For those exceeding 10%, progress advances are available. The Canada Mortgage and Housing Corporation validates up to 4 consecutive advances at no cost under the full-service option. Alternatively, lenders can validate the advances without pre-approval from CMHC under the basic service option. To determine the as-improved value, the property is assessed on a dual basis: the current market value, or as-is value, and the market value after improvements, or as-improved value. This dual assessment helps establish loan-to-value ratios and down payment requirements, ensuring that the improvements are factored into the property's value. It's important to note that the CMHC Improvement Mortgage Loan Insurance is available for Canadian citizens, permanent residents, and non-permanent residents authorized to work in Canada. With loan-to-value ratios reaching up to 95% for owner-occupied properties, this product opens up opportunities for many aspiring homeowners and investors. In terms of creditworthiness, at least one borrower or guarantor must have a minimum credit score of 600. However, CMHC is open to considering alternative methods of establishing creditworthiness for those without a traditional credit history. This inclusive approach ensures that more Canadians can benefit from this product, regardless of their credit background. The CMHC Improvement Mortgage Loan Insurance also provides opportunities for those looking to build or purchase energy-efficient homes. Buyers may be eligible for a 25% partial refund on their insurance premium through CMHC's eco products. This is a great incentive for those wanting to reduce their carbon footprint while also saving on costs. In conclusion, the CMHC Improvement Mortgage Loan Insurance is a robust tool for homeowners and investors looking to improve or build new properties. Its flexibility, comprehensive coverage, and incentives for energy-efficient homes make it a standout product in the market. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.